More of a focus on some stocks to watch. To do that, we're joined by Harry Watt from Shaw and Partners and Market Matters. Harry, a very good morning to you. Just talking about where we're at as far as the local market is concerned, and clearly what we saw on Wall Street overnight in response to those Fed minutes. What's your expectation for the market locally?
Yeah, it's not looking like it's going to be too busy a day today, Andrew. It was a pretty strong session in the US overnight. They are going to be on holidays tonight, though, so we're sort of a little bit directionless today. It'd be interesting to see which way the market does pick. Days like this is really good for where you sort of see the direction near term going. If the market decides that it wants to rally today, that's a good sign that's probably what's going to happen for the next few weeks, given that we don't have a great deal of a lead from the US and their Thanksgiving holidays tonight, Andrew.
Of course, we're in the midst of AGM season at the moment. Today, one to look at is Kogan, of course, the online retailer, which has suffered as we've returned to the shops. It did very well over the course of the pandemic, of course, then it wrestled with its inventory levels. What are you looking for in today's meeting?
Yeah, the comments are already out from the CEO and the chairman this morning, Andrew. It's going to be an interesting one, particularly for the retailers. Kogan, like you said, they did struggle coming out of COVID. They were a massive COVID beneficiary. They sort of overextended themselves in terms of particularly how much stock they were holding, how much warehousing then they had to take on as a result. Their costs blew out. They've been working on turning that around over the last little while. But from my point of view, I think this has taken a little bit longer than it should have for Kogan. They were a bit slow in reacting to the issues they were facing. And today's comments suggest that there's still a little bit left in the tank for them to do here. They haven't quite gotten rid of the backlog in their stock that they've had for about 6 months now, and that means their costs are still up. They've seen sales basically fall off a cliff. Sales are down 40% for their first 4.5 months for this financial year, Andrew. And that's really slowing their ability to turn this big ship around. They do have a little bit of cash. They've still got about 20 mil of cash in the bank at the moment, so they've got a little bit of flexibility on that front. But when you see sales down 40% and still having issues in terms of backlog of stock, I think that's a little bit of a concern for Kogan, but probably a concern for most retailers. We have seen Temple & Webster, which is a similar sort of space. They're doing a lot better than Kogan, I think, in this respect, and showing what can be done in terms of turning around these e-commerce businesses here.
All right, elsewhere this week, we heard from Bapcor at its Investor Day. Shares fell, margins clearly in focus for Bapcor.
Yeah, that was out on Tuesday. We've had a couple of weaker sessions from Bapcor on the back of that. Not a huge move overall. They did come out and say that revenue was tracking really well for the financial year today, and market sort of already priced in around about a 5% revenue growth for FY23, and that the comments suggest that that's pretty much on track. Perhaps, like you said, margins might be squeezed a little bit more than the market had expected. Market's trying to hold those margins flat, and they did really well over the last year or so in holding those margins flat, but now they're starting to see that squeeze come through a little bit there. There will be a little bit offsetting in terms of those price rises that they'll put through to customers. They will come through. They'll probably come through at the back end of next year. So you probably expect to see first half margins fall marginally. And that does take the shine off the stock. We do like Bapcor here. It does take the shine off a little bit, given that margin squeeze coming through. What we did enjoy out of their meeting on Tuesday was they talked to how they can leverage their asset base in terms of this big EV swing here. We've heard from the government they're going to give us some tax breaks if you go out and buy an EV car. Bapcor's got the infrastructure in place to sort of leverage that in terms of the unique auto parts that EVs will need, unique aftermarket situations that EVs provide as well. So they do have a little bit of a setup here that they can benefit from, and I do expect them to see price rises be put through without too much of a hassle at the back end of this year, and those margins to recover. So stock didn't really move, and I think at the moment the market's looking through this short-term margin issue. I don't think it's a surprise. I don't think any companies out there going, yeah, our margins are shooting the lights out. Everyone's sort of dealing with price rises and inflation differently. And those, if they can be confident that margins are going to, sort of revert to those long-term 45% sort of levels, then I think the market's got to be happy with that.
All right, Harry, finally, let's take a look in the copper space with Sandfire. Recently out with an entitlement offer that has now closed for as far as the institutional component is concerned. How do you see this? I guess, also so dependent on where that copper price is travelling.
Yeah, definitely. It's not just the copper price for Sandfire. There's a lot of moving parts in this business, but raised last Friday, done at $4.30 a share. You can see that the stock has held up really, really well despite a reasonably heavily discounted raise last week. It's actually rallied after that raise and performed, really strongly. I think that is a testament to how strong this business is and what this raise sort of takes away from markets. And the market was a little bit concerned about their liquidity position. They're bringing on a new asset next year in WA. They've got Matza in Spain, which is producing and is bringing in some cash flow, but it's got some issues in terms of energy prices over there in Europe and how much that squeezes their margins. But this raise sort of cleans the slate and really cleans up this balance sheet. They've got a new CEO that's going to start in April of next year. He's going to walk in the door and see a business that's got plenty of cash, got a couple of really good assets. It's got an asset coming online pretty soon after he starts as well. And the market's now going, well, look, this new CEO has now got a clean slate and he's got a beautiful company to run and a balance sheet that he can do a lot with as well. And we've always also seen with Sandfire, I think a lot of the tailwind in terms of buying here and why this raise probably came at a great time for Sandfire as well is that Oz Minerals bid from BHP. That will probably mean that Sandfire is the biggest pure play copper miner on the ASX pretty soon if that deal goes through. And I think people are starting to see that there's not a great deal of upside in holding Oz Minerals here. That margin to that takeover bid is pretty tight at the moment. And then now they're looking sort of down the curve a little bit and saying, all right, do I actually want to hold something that's only going to give me a little bit of upside? And if I want to hold a copper stock, why not hold a copper stock for its outlook in terms of that commodity price and its outlook in terms of assets? And that's not what Oz Minerals is giving you. So a lot of people will probably be looking at Oz Minerals going, well, why don't I sell that into this takeover offer? Gives me a lot of flexibility in terms of my portfolio. I can put that money towards another copper name that's high quality, that's doing well, recently raised money, and it's got a great balance sheet, and that's Sandfire for us.
All right. So overall, Harry, your recommendation on those three stocks?
Yeah, I want to leave Kogan. That's not one we like at the moment. I think there's better places to be in terms of retail. I'm happy to be there in Bapcor. It's done reasonably well at the moment. It's sort of come up a little bit from recent highs, but happy to be there. And Sandfire, we're really happy to buy Sandfire here. I think that's got a little bit more upside, and particularly given we've owned that one into the raise as well, we've got a lot of flexibility in terms of picking up some more shares at $4.30.